Edmund C. Moy says, Bitcoin and the ideas behind it will be a disruptor to the traditional notions of currency. In the end, currency will be better for it. Peter Thiel says, I do think Bitcoin is the first encrypted money that has the potential to do something like change the world. And finally, Leon says, every informed person needs to know about Bitcoin because it might be one of the world's most important developments. In today's video, we will look at what is Bitcoin and how Bitcoin transactions occur. For those of you who have not seen my previous video on blockchain, I would highly recommend that you go back and look at that video. I can provide a link of that video down below. But before we begin, just a quick introduction. For those who don't know me, I am Santo. We run the website thetwig.com, which you're seeing here. We are primarily focused on investments along with cryptocurrency. I would like to add a caveat that I'm not a financial advisor. We post these contents which are primarily for educational and information purposes only. And we recommend you to do your own research and touch base with your own financial advisor to gain an understanding of your current situation before you make any investments. So let's look at Bitcoin. What I've done is I have provided you a link at the top, which takes you back to the video on blockchain, which explains the entire concept of blockchain. It's important for you to understand that so that you can relate back to what Bitcoin is. So what you see on the right hand side, Bitcoin is the first digital coin, cryptocurrency. It was created by the creator of the first block in the Bitcoin blockchain network. It was created by Satoshi Nakamoto. So in a sense, a cryptocurrency is a digital or virtual currency that is secured by cryptography, which makes it nearly impossible to counterfeit or change or tamper with. And Bitcoin is designed around the idea of using the cryptography hash algorithm. Again, I have talked about this in the previous video on blockchain, and I would highly recommend that you look at it. So how did Bitcoin come into existence? I mean, it's a mystery. We still do not know as to whether Satoshi Nakamoto is a single person or it's a group of person, an organization. There are lots of question marks and doubts around who Satoshi Nakamoto is. But for fact, what we know is the timeline behind the genesis of the blockchain and Bitcoin is the first digital currency. So on 18th of August 2008, that's when bitcoin.org was registered. And again, for all the readers, all the listeners here, I would recommend that you go back and look at bitcoin.org because it gives you a background on what Bitcoin is all about. There was a paper on a peer-to-peer electronic cash system, which was posted on the cryptographic mailing list by Satoshi Nakamoto on 31st of October 2008. I'll create a video on the peer-to-peer electronic cash system, talking about the key points from that white paper in a subsequent video, which I'll provide a link back on this video as well. So around the time when we had the largest global financial crisis, around that time frame, the 3rd of January 2009, that's when the Bitcoin network came into existence, the blockchain network. Satoshi Nakamoto was the first person to mine the block, the first block, the Genesis block. And as part of that mining of the Genesis block, he was awarded 50 Bitcoins. Subsequently, on the 9th of January 2009, he released the open source Bitcoin client software on SourceForge, which is the foundation of the entire blockchain network. And after this, the Bitcoin client was released on SourceForge, there were other developers who came into the mix as well. So there was one of the first developers who was part of the ecosystem was Hal Finney, and he became the first receiver of a Bitcoin transaction between Satoshi Nakamoto and him on the 12th of January 2009. So that's how Bitcoin was born. It's been 12 years since its making, and it has started to percolate across the ecosystem slowly but surely. We have looked at the genesis of the blockchain and the Bitcoin network, how it started from 2008 when the Bitcoin.org was registered, and through to the creation of the first block itself by Satoshi Nakamoto, and the transaction that happened afterwards. What we'll do is we'll go back and look at Bitcoin.org to understand a little more of what Bitcoin is all about. But essentially, it's the currency which resides on the blockchain network. And in this case, when I say the blockchain network is the Bitcoin blockchain network, because now subsequently we have had lots of other blockchains that has been developed. Another example is Ethereum, which is outside the scope of this video. So what does Bitcoin.org talk about Bitcoin being, right? So it says Bitcoin is a peer-to-peer technology to operate with no central authority or banks, because it's part of the blockchain ecosystem, and it was created as the digital currency or token for that ecosystem. Bitcoin is used to manage transactions, and the issuance of bitcoins is carried out collectively by the network, right? So when it says collectively by the network, it essentially is defined by the nodes in the network. So an example of the Bitcoin network is shown on the right hand side. It's nothing but a network of computers or nodes. So there are quite a few important characteristics that we see here, right? So it's at the end of the day, it's a technology. Bitcoin is a technology within the blockchain network, and Bitcoin is open source. So anybody can go back and look at the code behind the entire blockchain. Its design is public. Nobody owns or controls Bitcoin, and everybody can take part. So all of us could be part of that Bitcoin ecosystem. Bitcoin and the blockchain network on which it resides, it allows for the fast peer-to-peer transaction. Essentially, there is no central mechanism to control it, because it's decentralized. It resides on a network, and it works on a consistent mechanism. The idea of using cryptography to control creation of digital money and control the transactions of digital money was first described by Waidai in 1998 on his cyberpunks mailing list. That's where the concept first evolved, right? Which was taken forward by Satoshi Nakamoto in his proof of concept Bitcoin paper. So Satoshi Nakamoto took this concept further by creating the Bitcoin client and essentially the Bitcoin network itself. And as part of that network, Bitcoin as a currency was born for that Bitcoin network. So if you look at the overall network, it has four different components to it. One is the Bitcoin currency, which is used to do transactions between different parties within that Bitcoin network. The second is the fact that each of those transactions get added into a block, and the blocks are stitched to each other through a hash mechanism, so that the transactions are added in a sequential fashion, and the blocks are also get added in a sequential fashion, forming what is called the shared digital public ledger, the first digital public ledger. The third aspect is the involvement of the computers, which are called miners, who are involved in the process of creation of those blocks and stitching those blocks in a sequential fashion, one after the other, using cryptographic hash function. And the fourth aspect is the nodes or the validators who validate the transactions that gets added onto the block. What we'll do is we'll look at this entire example of how it works within the blockchain ecosystem through an article on 10.medium.com by Michelle DLAC, where she explains the process through some simple diagrammatic representation. So what you see first is view or a representation of what a blockchain network might look like, with lots of nodes within the network which are all connected to each other through the computer network. Now if you go further down, we see an example of what a ledger might look like. For example, here you see the account owners with the balance value against each of them. Let's say David sends Sandra 5 Bitcoin. So the initial the summary view of the ledger before the transactions happened would have shown David having 187 bitcoins and Sandra 83. But once the transaction is completed, then the value of Sandra increases by 5 bitcoins, while David reduces by 5 bitcoins. So this message is propagated throughout the network so that each node on that network, essentially the computer within the network, has a copy of the transaction message. It updates its own ledger so that all have essentially the same copy, and they accept the transaction as being valid. So this transaction that we saw where David sent 5 bitcoins to Sandra could have been done through David's wallet. Now each wallet has two keys. See, one is the private key and the other is public key. Private key is private to David, which is something that David should not share with anybody else. So David can access his wallet using his private key, which is not shared with anybody else. So when a transaction happens, that transaction along with David's private key is cryptographically has to form a digitally signed transaction, and only the digital signed transaction along with David's public key is broadcast to the entire network. The reason it's done this way is so that nobody can access his wallet. And also, once the digitally signed transaction is broadcast to the network, the public key of David can be used to verify that the transaction is authentic or not. So these transactions, which I talked about, keeps on getting added into a block. For example, in this diagram, you see there are 5 unconfirmed transactions, right? So unless it's confirmed and frozen into a block, it's still not confirmed yet. The nodes are the ones which group these transactions into the block. What you already see here at the bottom of it, there are blocks which have already been formed. So this is block number 145, 146, 147, 148. And now these unconfirmed transactions will form the block number 149, which is the next block in this chain. So this process starts when the size of the block starts reaching its peak. That's when the process of hashing the block comes into the picture, and a new block is formed. So this process of creating a block where the transactions gets added, and once they are confirmed and a block is created, and then that block gets added to the previous block. This process has been explained really well by this article from Kiran Vaidya, which is what we'll be talking about next. In this article, he shows in a diagrammatic fashion or through a sort of a flow chart or a pictorial representation how Bitcoin is mined, and it gives a perspective of what Bitcoin really is. What you should also do is, as I said earlier, it's good for you to go back and look at the video on blockchain, because that will give you a base foundation to be able to understand what Bitcoin mining is all about. Now, what you see in this diagram is on the right hand side, we have the existing blockchain where any new blocks that get created keeps on getting added, which is shown through an arrow here on the right hand side. So all transactions, they form these blocks, right? So these blocks that you see, say block X, X plus 1, X plus 2, and so on, these are all formed by transactions, and transactions are say a transaction where I transfer 1 Bitcoin to somebody else, right? So that could be a transaction. Now, multiple transactions can be encapsulated within a block, single block. Once the block reaches its size limit, that's when the process of the hash function comes into the picture. The cryptographic hash is nothing but certifying that this block is a final block. The data is sacrosanct, and this has been accepted by all the nodes or the computer or the nodes within that network ecosystem. Now, there are 3 different things that is part of creation of the hash function. One is something called a nonce, which is a number which is used only once. The second is a difficulty target, and the third is the hash itself, which is generated. Now, in the last video, I had shown you again, I've given a link to that video on what is blockchain. I've given an example of how you create a hash function with an example of SHA, secure hash algorithm 256, which is the process that is being followed here. So what it does is it increments the nonce. It calculates the hash of the the block header, which includes all the transactions within it. And once it does, it looks for the hash with a certain number of leading zeros, which is called the difficulty target. So if the difficulty target is met, suppose the difficulty target is, let's say, 1, where the hash needs to have the leading zero as number 1, then it's accepted by all the nodes, and that's when the block gets created. And once the block gets created, it gets accepted into the blockchain. But what if the hash that is generated is not having that leading zero, which is equal to the difficulty target? Then the process of finding the hash using the knowns at the required level of difficulty continues, right? So all the miners have to continue doing the process till they reach a state where they find the hash with the required number of difficulty. And then if all the miners within the network agree that yes, this is correct, this has the required amount of difficulty, and then they accept the block. So that's what the process is. And as part of the process, to reward the nodes, or as an incentive for these computers to participate in this network, the Bitcoin is awarded, right? So it's a proof of work incentive, which is the newly created Bitcoins, and as part of creation of this block, they get these Bitcoins. And what you see here is that difficulty target gets readjusted again after the 2016 block has been created. So that's one step when the process of readjusting the difficulty target is changed. And at the same time, if any other miner creates a valid block which is agreed by all the miners participating within the network, then the process of adding transactions into next block starts all over again. So having understood what Bitcoin is, what can you use Bitcoin for? So the use cases have expanded, but the simple, most basic use cases are you can buy a Bitcoin on an exchange. So for example, I quite often use Binance, I use Coinbase, I use Kraken. So there are lots of exchanges which have become operational and full-fledged in terms of the privileges that it provides, and you can definitely buy Bitcoin on all of these exchanges. You can transfer Bitcoin from one wallet to the other. You can transfer from one person to the other as well, and you can send Bitcoins to each other using mobile apps or even computers. It's simple as sending cash to somebody else, and it's pretty fast and almost instantaneous. I've already talked about the concept of mining, where you can mine Bitcoins by participating in the Bitcoin network and enabling the creation of those blocks. So that process is mining, and by that process you get incentivized and you can win rewards in terms of Bitcoins. Now these Bitcoins can be stored in the wallets, and these wallets could be physical wallets, as well as the wallets could be on the cloud as well. So I'll leave you with a video of Michael Saylor talking about Bitcoin and what he thinks about it. Let me know what your thoughts are on what is blockchain and what is Bitcoin. And if you have any questions, always reach out to us at invest@thetick.com.
I think the US dollar is going to spread to 5 billion people. I think that this decade is going to see the explosion of the US dollar as the reserve currency of the world. It'll be the digital currency that'll be on every iPhone and every Android phone in every country in Africa and Asia and South America. And it'll move on Bitcoin rails. The Bitcoin open monetary protocol is what allows the US dollar to spread to billions of people. In an inflationary environment, money breaks down into two forms. There's a medium of exchange, we'll call it the currency, and that'll be controlled by governments, and the US currency is going to be the most powerful one. And then you need a store of value, and that's an asset, and Bitcoin is the most powerful store of value on earth.